and welcome to my channel. For those of you new, my name is Dave and I work in financial services. And these videos are a mixture of my journey and development towards financial freedom. They will cover financial products, they will cover financial well-being so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. And this latest video is about my individual saving account for my review, which I do on a monthly basis, covering February 2023. Now, it's not to boast or brag or say, look at me, but it's to give people an idea. If I can do it, you can do it, and the sort of steps I've taken to reach my current scenario. Now, the aim of the portfolio for this year is annual growth rate of 10%, annual dividend of £2,400, and we're looking for a year-end value of £94,000. Now, we've had another good month. The start of the month, the portfolio is worth £78,299. At the end of the month, it was worth £79,726, an increase of the month of £1,427. So another good start building on January's. Now the year to date, the portfolio is up 7.1%, and a quick comparison to FTSE 100 during 2023 is up 4.66%. Now, if we look at the monthly contributions, during the month we've made up a rather strange amount of £1,604.52, but the reason we've hit that target is we've now filled our ISA allowance for this tax year being the full amount of £20,000. Now, we've done it last year, we've done it this year, we may not do it in future years, but it's a significant milestone towards our journey. During the month, our platform provider charges monthly fees roughly about the same of £12.23, which is based on a percentage of our portfolio value. If we look at the following chart, a quick overview of where we're invested. So predominantly UK based, 65.55% is in UK and Europe, 20.36% is in Americas, and 14.09% is in Asia and emerging markets. Now, just a quick overview of the dividend received during the month. We've received two dividends from AJ Bell, the platform provider, gave us a dividend of £23.59, and one of our mid-cap funds gains a dividend of £20.66, so during the month, dividend of £44.25. Now, across our 9 shareholdings, the average yield is 4.13%. Now, let's dive onto the portfolio. What sort of holdings do we hold within the portfolio? Now, we own 9 shares, 6 in profit, 3 in loss. Total share value of £37,245, which makes up 46.72% of our portfolio, of which 40% is in the FTSE 100 and 6.68% is in the FTSE 250. And if you look at the following chart, an overview of the shares and some recent developments during the month. Now, during the month, it's been quite a busy scenario. We've had a lot of companies give us our results because they're mainly in the banking sector. And then next month, we'll have a lot of results due in March because we're in the insurance sector. So our largest holding of note is Legal & General. 3,454 shares, £8,800, makes up 11% of our portfolio. And during the month, we did increase our holding. We bought 155 shares for £400. It's giving a very nice yield of over 7%, hopefully be reflected in results due early March. Our next holding is Lloyds the Banking Group. We own 16,369 shares, £8,600, 10.8% of our portfolio. Now, we had so-called very good results. Okay, dividend was increased from 1.3p as a final dividend to 1.6p, so it will give us around about £500 in May. But the sector did not like the results, and the shares have not done much during the month. But it's obviously worried, shall we say, about banking positions and what happens in the UK moving forwards. But from our perspective, very good results, and dividends was increased. Our next holding is Aviva, the insurance company. 1,205 shares, £6,500, nearly 7% of our portfolio, and hopefully during the month of March it will give us very good results and hopefully a very nice dividend, again payable around May. Our next holding is Card Factory the retailer, 3,207 shares, nearly £3,300, 4% of our portfolio. Now, back onto the banking shares. We own Barclays shares, 1,538 shares, £2,700, 3.37% of our portfolio. And again, good results, but the market didn't react very well to them because of provisions or bad debts. But the dividend was increased from 4p to 5p as a final dividend. So it will give a very nice dividend during the month of May. Now again, back in the banking sector, NatWest, 902 shares. We did top up 130 shares during the month, £400, £2,600 of portfolio, makes up 3%, and again, a very nice increase in the dividends from 7.5p as a final dividend. It's now giving us 10p as a final dividend. Now away from the banking sectors, we own Sainsbury's, the retailer, 844 shares, £2,200, nearly 3% of our portfolio. Has had a very good run recently, has settled down, but everyone needs food. It's very cash rich and very good results were given just after the Christmas trading performance. Our next holding is AJ Bell, the platform provider, 629 shares, and again we topped up during the month, 150 new shares for £400. At the moment, £2,000 makes up 2.5% of our portfolio. Did have very good results lately, very good trading dividend, and it paid us a nice dividend of nearly £24 in the month, but considered a so-called growth company. And then our smallest shareholding is HSBC, a global bank, 236 shares, £1,500 in total, 1.88% of our portfolio. Was one of the very few banking shares that have done well in the month in regard to performance and the reaction to the markets. Dividends was increased substantially, but it's also going to give a special dividend at the end of the year or the start of 2024 when it sells operations within Canada. So although our shareholdings have not really increased during the month, we've had some very good results. We've had some very good dividend increases across 4 of our holdings, and hopefully that will continue in March when the insurance companies produce their results. Let's dive into what sort of funds we hold in our portfolio. So looking at the following chart, we own 12 funds, 7 in profit, 5 in loss, which is about the same on a normal month. Total for values is £42,422, makes up 53.21% of our portfolio, and we did increase an existing holding. Our largest holding is the Passive Adventures Tracker Fund, £16,754, makes up 21% of our portfolio, and we did put in another £500 a month to diversify away from the UK. It's very cheap, it's got a very good track record, and it, shall we say, it does what it says on the tin. Okay, it will cover across a numerous sectors. We can just switch off and leave it, and it does give, shall we say, very nice returns year on year. Our next holding has recovered somewhat. It's a legal and general technology fund, £6,594, 8% of our portfolio, owned around about 270 stocks within the technology sector, predominantly UK based obviously. Our next holding is quite selective, the Barry Gifford Positive Change, £3,700, 4.7% of the portfolio. Okay, it was done on selective for ESG, shall we say, but a long-term hold, a very good track record. We own a US smaller company fund, £3,200, 4% of our portfolio. And then one fund that has struggled recently is a China fund, £3,000, 3.84% of our portfolio. Hopefully market sentiment will improve now COVID restrictions reduced in China, but hopefully the market will recover. A long-term hold within our portfolio, but it has struggled recently in the last 12 months, just like our emerging market funds. And then last fund of note, shall we say, is a mid-cap fund. £2,000, 2.6% of our portfolio, and it did give a dividend during the month. Now, we do own some other funds, shall we say, emerging market funds, AIM fund, mid-cap fund, a UK equity fund, and we own our smallest fund is a Russia fund. We did put £500 in. It went up to £600 plus, showing a nice profit, obviously being affected by the situation in Ukraine, and it's struggled ever since. Now a probably lowest amount, £223, but thankfully it makes up 0.28% of our portfolio. We're not prepared to sell a loss, we don't need the money, but who knows what will happen with that fund in future. So, a collection of funds. We see no reasons why we're going to reduce some holdings unless market sentiment change or the management change, but they were bought for a specific reason because we were solely UK based. Now remember, these are my own predictions. Okay, we've got very good returns, 7% for the year to date. Our aim is 10%, but during the month we've got some very nice dividends which will be invested in the portfolio during April and May and June. But said it's not to boast or brag. If I can build a portfolio, you can build a portfolio. And remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in our next video.